Good morning to all traders and welcome to another daily market insights video provided to you by Orbex. Today is Thursday, the 20th of June, and we'll have interesting news. Fed finally ditched the patient message yesterday and turned to a trade deal for future guidance. So at the same time, they reiterated that despite markets want to see two cuts in 2019, and despite the US yields, of course, indicated that, and they were pricing in two Fed cuts, by the end of 2019, Fed would still act as appropriate to sustain the expansion in the US. Now, in other currencies, the Bank of Japan held rates unchanged, as always, leaving the yen denominated pairs in the mercy of US policy. Now, adding on policy, RBA's law spoke overnight as well, and he signaled that the bank is more likely to follow the same path as Fed, have two cuts by the end of 2019. But then again, he also cited that a trade deal, the trade war pretty much. So it all hangs on the trade deal potentially, and I think we're going to have a few headlines coming out over the past few weeks on that. So saying that Aussie wasn't able to perform as good as other currencies, and since we have the Bank of England interest decision as well, I decided to have a look at the pound yen as well as the euro Aussie, as euro as well has surged quite a bit following Powell's speech yesterday. So today we have the EU leaders summit starting, so I would pay attention to what's happening there. Okay, we are going here a lot of headlines coming out. We still expect the conference from Bank of Japan, then retail sales in the UK, the interest rate decision, and later in the session, initial jobless claims, financial, Fed manufacturing index. If I'm not mistaken, we'll have speech as well at the end of the session of Bank of Japan Governor Carney speech. Now, on the charts, pound yen, we are in a corrective move. This is like a zigzag, which most likely is going to go a little bit lower and finish around 134.66. Of course, that could be the end of wave 5, which means that we could start seeing prices retracing now and then moving all the way up. We really need to break above 138 or so to validate that this is the case. But in case this is the bottom, then we're looking at the big opportunity here, breaking above 148, because that would be the wave 1, wave 2, and we're going for wave 3. Now, what else I can see is because indeed I'm expecting prices to move a little bit lower, and that is not only because of the Fibonacci extension, but also these two signals on the MACD and RSI. I'm expecting wave 5 to move a little bit lower. Now, because we are on a WXY pattern, and because that exact reason is that prices stopped right here, I'm expecting this to become a WXY XZ, a double combination here, a double zigzag that could come up here to 138.26 or so, or even a little bit lower, and then combine this formation with an ABC expanded flat or something, okay, where the wave A is expected to create a double bottom. Then we're going up to extend that level beyond that, and then we're looking at prices moving finally down for a false break. Of course, that is not always the case. All of this could just fail and prices would just go down here for a false break, and then we'll move all the way up, okay? So both scenarios are still in play. Of course, the next few hours are going to give us a few more insights as to prices are going to move into the suggested direction, formation or not. Invalidation points anyway, 138.26, then 138.73. If we break above 139.56, then we're really looking at prices to breaking, to going for wave 3 all the way up, okay? Now, I want to go quickly on Euro Aussie as well. We are looking at, a combination of a flat and an expanded flat. So probably looking at price moving lower here in the medium and long term. Thing is, I don't see very good signals here to the downside as well. So although I have this labeled as 1, 2, 3, 4, 5, that might not be the case. Okay, that might not be the case, and what could happen is prices could take into consideration, actually markets could take into consideration that this is the last ABC zigzag that they're looking to use to take prices up to. So in case that happens, prices are most likely going to move according to this wave AB and the extension, 100 extension for the zigzag, of course, as in theory would move up to 166.23 or so. So we're looking at wave 1, 2, 3, 4, and 5 instead. Okay, and then we start looking for prices, for bears to actually step in heavily. Now the question is this going to happen? We don't know. Invalidation point again, anyway, would be the 163, around 63. Okay, that level. Just draw a line here, and you'll be able to see that. If that happened, then we're probably looking at this failing, and prices are going to move all the way down for a different formation. Now, the other scenario would be that prices are actually indeed moving up, and that since we are here on a triangle pattern, we are going to move we moved on an ABC over here. We created this low, and then we're looking at another ABC pattern all the way up here above 166, where prices could start falling. Both RSI and MACD indicate that there is supporting signals that prices are going to move up, okay, and that's why I believe prices are indeed going to move for another wave 5 up. The thing is, I wouldn't be surprised if I saw something like this, where the ABC is here, and what we could have happening is that drawing this down there, that would be that would be an open triangle pattern, and from here we're looking at ABC up there. Now the thing is, we want to see where that low goes to. Since we stopped here, it's a good the potential for that of being an ABC and that being the low for now is quite high. But I wouldn't be surprised if I see prices breaking below, creating a new low, so we can draw a new triangle pattern, then move all the way up, and then move all the way down in the longer term. Of course, the other invalidation point would be the 161. So that's all for the day. I want to thank you for watching for another day. I would recommend that you keep an eye on our blog, as well. We'll cover the latest news, published ideas, and provide all the necessary tools a trader needs.